Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So this is the second last week of the month and of the year. So it's also the week just before Christmas. So we will be expecting to see a lot of economic news happening in the markets, and I expect to see some increased volatility. So last week, we enjoyed some good volatility as various central banks were announcing their interest rate decisions. So this week, we also be having another central bank, that is the Bank of Japan, making an interest rate decision. And of course, we'll be having a couple of economic announcements, and these ranges from consumer price index or inflation gauge. We also be looking at the PCE, personal consumption expenditures, and of course, we also be getting GDP data from a couple of economies. So we'll be starting by looking at the economic calendar and trying to understand the key events for the week. And once we go through that, then we do some technical analysis and try to understand where prices might be headed. So today, being Monday, is quite a slow day. As we always say, if we don't have any news happening in the economic calendar, then it becomes a price action traders territory. And at the same time, I don't expect a lot of unidirectional moves. In this case, we expect the markets to be ranging as they await more economic news during the week, which could bring in some much needed volatility. So I think the only notable news will be the German IFO business climate. This survey will be released at 12 p.m. or midday. Then later on, we'll be having the German BUBA monthly report, and this is tentative just past 1:30. Then in the evening, we'll be getting the housing price index for both Canada and the US. So tomorrow, this is when we'll be expecting majority of the news. So one, monetary policy meeting minutes for Australia or from the Reserve Bank of Australia at 3:30 a.m. So this is expected to bring in some clarity into how the interest rate decision was made to hold interest rates at 4.35%. Then we have the Bank of Japan, which will be meeting at 9 a.m., I believe. Just trying an economic calendar that has the definite time. Yes. So the Bank of Japan interest rate decision will be at 6 a.m. And in this case, we are expecting that the Bank of Japan may hold interest rates at the current level, which is negative 0.1%. So a lot of investors are thinking about this and looking for ways to understand the BOJ monetary policy. So there has been a lot of speculations that the Bank of Japan could be shifting from this trend of negative interest rates to positive interest rates by January next year. So there's also that potential wild card that the Bank of Japan could implement a rate hike later in the week, that is tomorrow. And if that happens and it surprises the market, it could bring in a lot of volatility for the Japanese yen pairs as well as the Japanese stock market index. So besides that, we'll be having more news in the week. So at 1 p.m. on Tuesday, we get the final core CPI as well as a final CPI for the Eurozone, where inflation is expected to have remained at 2.4% on the year. Then for Canada, we'll be getting the CPI or the inflation data at 4:30 p.m. Then we move on to Wednesday, where we get an interest rate decision from China. So we're expecting China to hold short-term interest rates at 3.45%, and then the 5-year prime loan rate at 4.20%. So we also be getting inflation data coming in from the UK, and this will be on Wednesday at 10 a.m. So inflation in the UK is expected to drop to 4.3% from the previous reading of 4.6%. So later on, we'll get the CB Consumer Confidence Survey as well as existing home sales from the US and on Wednesday at 6 p.m. Then you'll get the crude oil inventories at 6:30 p.m. on Wednesday before we move on to Thursday, where we will be focusing on retail sales from Canada at 4:30 p.m. Final GDP and unemployment claims from the US, and this is still at 4:30 p.m. We also get the Philadelphia Fed Manufacturing Index. Then once we get Friday, we'll be starting with Japanese national core CPI or inflation rate, which is expected to have dropped to 2.5% from a previous reading of 2.9%. So we also get retail sales from the UK, and this is from 10 a.m. Then GDP data at 4:30 p.m. And the most important data point for the week will be the core PCE price index. This is the Fed's favorite inflation gauge. So in this case, we will be expecting some good market volatility from these data reports. So it will be coming at the same time with core durable goods orders, personal income, personal spending, all that at 4:30 p.m. on Friday. And as we approach the end of the week, we get new home sales data, as well as revised University of Michigan Consumer Sentiment Survey data. So it looks like a very busy week with a very slow day on Monday. So today we continue monitoring the markets, looking for potential opportunities. And once we start seeing those breakouts, those momentum movements, then we start identifying potential entry opportunities. So on the earnings side, we don't have much happening this week. So Monday, only Heiko is reporting. So key notable earnings will include the following. One, we have the FedEx earnings, which will be released on Tuesday at market close. So analysts on average expect the company to post fiscal Q2 earnings of $4.20 per share. And this should be up 32.1% year over year from a revenue of $22.4 billion. And this should be down negative 1.8% year over year, or basically compared to the same period last year. So other companies that are reporting earnings on Tuesday include Accenture, FactSet, Fuel Cell, Steelcase, and Worthington. Then on Wednesday, we get BlackBerry, General Mills, Toro, Miranol, and Weinberger. So the other notable earnings include Nike, which should be reporting on Thursday at market close. So Nike has lagged the broader market in 2023 with consumer discretionary stocks total return, that is the price change plus dividends, at 4.7% year to date. And this is compared to the S&P 500 performance of 24.9%. So most analysts maintain a buy rating on the Dow Jones stock. So for Nike, we know that there is this expected demand, especially in sporting, where we'll be having the Africa AFCON, or what you call the African football tournament, and this should be starting in January. So we'll also be having Asia Cup in January. So as we get to the top of these international events, then demand for sporting equipment as well as Nike brands might be on the upper side. So there's a possibility that we could be seeing investors betting on this as a good investment for January or basically quarter next year. So in this case, with Nike basically making 4.7% for investors, which is lagging the performance of the S&P 500, which is up 24.9%, then it's something that you ought to look into. So basically what I'm saying, it's not a recommendation. It basically means you add it to your watch list, do further research. And if you decide that this is an interesting decision, then perhaps make a decision on it, especially after we get the earnings report. So besides that, we don't have much happening for the week. So now I think it's time we look at a couple of charts. So the dollar index has been majorly losing for the better part of the last, I would say, 7-8 weeks. So last week on Friday, we saw the dollar index attempting to make a recovery. And today you can see that the markets have opened and we don't have much of a momentum. So it seems more of a slide. So from the open of the market, we have seen this slide continuing here, and it might imply that the dollar index may continue with the trend that we saw last week, where it was largely losing as investors were betting that the Fed is done with rate hikes and could potentially be going for rate cuts in early next year. So as a result of that, we continued seeing the dollar index being weak. So despite the strong rally on Friday, we could be seeing a continuation of the bearish momentum. So what this means is that if we see the dollar index continuing to weaken, then pairs such as Japanese yen could start continuing to recover against the dollar. So for now, what we are seeing in USD JPY currency pair is a big drop that happened last week, and then 2 days followed, Thursday and Friday, with consolidation. And today being Monday, what we are seeing here is the market continuing within this pattern. So in this case, we will be watching for a potential break, either to the upper side or to the lower side. But then the dollar seems a little bit weak. So a potential reversal could see us breaking the lower trend line. But then if the dollar picks up during the London session, then we could be seeing a break of this trend line higher. So monitoring that consolidation here will be very important in identifying the next direction for USD JPY. So as for the pound, we had some good volatility last week. So after we got the interest rate decision news for both the Bank of England and the Fed, the result was a very strong pound against the dollar. Then on Friday, we erased some gains. And then today, you can see the market attempting to make a recovery. So we could be seeing the pound either recovering and getting back to the previous high, or the exact opposite, where in this case, we start seeing the pound erasing gains. So it's clear that the previous high was a double top, Thursday and Friday last week. So a double top is where the market finds a level, is unable to break, gets back to the same level, and also fails to break, meaning that there are two tops at the same level. And it's often taken as a reversal signal. So in this case, you can see how it happened on Thursday and on Friday. So perhaps we will be seeing some further pullback coming in from pound USD. So from the setup here, even from the daily chart, you can see the strong acceleration and how it found that resistance. So from the 4-hour chart, this is how it looks like. And from the 1-hour chart, this is what we have. So clearly, we don't have a very straightforward way of knowing the direction. So it basically means that without anything happening in the markets today, we'll just be monitoring this consolidation to see where the market might be breaking next. So we still don't have a direction yet. So we just remain patient and wait for the breakouts to start developing at some point in the day or at some point in the week. So in this case, for pound USD, I don't think we have a strong directional movement yet. So it's the kind of a market that you just monitor, trying to understand where it might be headed next. So that's how it looks in the 5 minutes chart. So as for Euro USD, this is what we are having here. So a market that was basically selling last week, and today it seems to have bounced. So a potential rally back to a previous target. So in this case, what I'm talking about is the market now bouncing from that area and getting to this previous target of 1.09634. So the bounce seems pretty strong to me. You can see the candlesticks on the 4-hour chart. So the close of the market on Friday, the open today, and the reversal here. It's actually a book pattern that we call a morning star. So in this case, after the big drop last week, you can see the market bouncing off this area here. And now there's a good likelihood that we continue moving higher for the day. So for USD CAD, we already got to the target. Remember, the target was 1.33791. But then once the market got to that area, you can observe the price action. And now I don't think we have anything here. So right from Friday's price action, if you go to a smaller time frame and zoom out, then you can see it's a market that is basically consolidating. So we don't have a direction yet. It seems like this market is just moving sideways. So it means that you might have to stay put until we have a potential breakout. So Monday being a slow day, I would expect the market to remain within the same area until there was some news fueling some momentum in the markets. Whereas even for gold, we are seeing a similar price action. So there's nothing much to be done here. So for anyone who is monitoring these markets, you can already see that the volatility we were experiencing last week has already died out, and we might have to await a couple of news announcements before identifying another market direction. So the good thing here is that we had a big bounce in gold, and this happened on Wednesday. Market found resistance here, and then on Friday, the same level, and then we started seeing this inverse movement. So gold has been pretty strong. I remember 2 weeks ago hitting 2182, and then last week hitting 1972. So now in this case, after finding this resistance, we don't have a direction yet. But what we have here is a very important chart pattern that is presenting a potential breakout. So a potential breakout, especially with a weak dollar, would mean the market breaks this upper trend line, and in that case, present an opportunity to go long. And of course, if the market was to break that area, then we could be seeing some small rally extending all the way up to around 2029.84. So in this case, from a very small time frame, 5 minutes chart, you can see the consolidation. And once we have a break, then it will be clear what direction to take. So we can also see the struggle in AUD/USD, similar to gold. Market basically finding resistance at 0.67273. So from this area, you can see the number of times the market have tried to break that area. So clearly, it's a very strong resistance. And if you look at the base of this resistance, this is just after breaking the previous high. So the last time the market was trading at this level was some time back in July 31st. So in this case, after breaking this area, which was the previous high, the market has continuously retested the area again, meaning that for that particular period, the market has simply been trading in what we might identify as a range. So this is the very definition of a ranging market. It's not moving up, it's not moving down, it's just remaining within that area. So in this case, it means that we be patient and wait for that potential break. Whether it breaks to the upper side or the lower side, that will give us a direction to take. Then for US equity indices, I think the strong rally we saw last week is now weakening. So if you go to a smaller time frame and you zoom out, you would notice that even the NASDAQ 100 has found some very, very strong resistance here. So if that's the upper trend line, the lower one seems to be taking another angle here. And what this basically means is that we have an ascending triangle. So for those who are not conversant with this, should know that this is a very interesting chart pattern, which might turn out to be a reversal pattern or potentially a continuation pattern. So the idea is to watch for the breakout, either to the upper side or a breakout to the lower side, which would give us a potential trading direction. So this is what we should be watching for the day, especially based on the volatility we have been observing on the NASDAQ. So for the Dow Jones, also the market is struggling to form higher highs, and in this case, indicating potential weakness. So we'll also be observing this zone here to see what happens and whether the market keeps pushing higher or whether we see some form of reversal. So for the S&P 500, it's similar. We can see this market is also struggling to form higher highs. So the consolidation basically begins from around this area. Then on the lower side, we have something similar. So I believe that all these markets are awaiting more news this week so that we can have a clean direction that the market is taking. And this will present opportunities once we get out of these consolidations. So Brent oil really made a very strong comeback last week. So on Wednesday, Thursday, and Friday, kept recovering and eventually ended the week on a high. And in this case, if you go to the 4-hour chart, you can see the open and the close of the week. And if you use the weekly chart, then you can see this is the first green candlestick we had in a long duration of time. So I would say in about 7 weeks that oil prices were just trading lower. Last week, we managed to find support somewhere above $71, $72 per barrel. Then the market managed to close in the green. So this week, we could be seeing some further recovery in oil prices. So the surprising thing last week was the big drop that happened towards the end of the week. And then the market recovered and eventually managed to close on a high. So today, if you look at the price action and then you zoom out, you'd notice that it's also within a consolidation. So if I was to say clean my chart, remove everything, go to the 15 minutes chart and check the price action of the last 3 days, then we can all identify the strong resistance here. So clearly that market has been unable to break that area here. And of course, on the lower side, if we subtract just this one eventuality, this was the rejected prices on Friday, right here where the market dropped and got back into pattern, then this is the overall direction of this market. So clearly it's a ranging market. So we potentially wait for the break, and that break could be happening at some point in the day, or perhaps once we get some more economic news tomorrow. So European equity indices are clearly on a strong run with a very strong correlation with US equity indices. So we don't have a reversal yet. So it seems like we should be seeing some further upside momentum. So other key component to notice here is that we have a major resistance here marking the highest price that we have seen. I believe this was April this year. So for the French 40 index, this is an all-time high. And from what we are seeing here is a market that formed the all-time high on Thursday, reversed immediately. Then on Friday, attempted to go up, failed. And then today on Monday, is now presenting potential signs of a reversal. So from the 4-hour chart, now we are seeing the price attempting to push down lower. And from the 1-hour chart, you can already see that there's still some form of support running around this area here. So there's still more room for downside momentum on the French 40 index. So you could be seeing some further downside momentum happening today. So from the 4-hour chart, this is how it looks like. And of course, from the daily chart, it shows that there is a potential room for momentum further downwards. And this could get us all the way down to 7,454. And this could be an occurrence for the entire week. So for the Euro 50 stock market index, it also seems like we have a reversal pattern. So after the reversal we have seen happening in the French 40 index, we're also seeing something similar. And in this case, for those who are conversant with the pattern, we have what looks like a head and shoulder pattern. So this is how you identify the movements. So market goes up and then gets back to this point, which we might consider to be our neckline, then gets back higher and forms a much higher high. In this case, we might identify this as the head. And then on the other end, you have the other shoulder. And once the market gets back to the neckline, then you have a complete pattern. So in this case, this is the kind of pattern we are having here, which is indicative of a reversal, a market which is unable to form higher highs. And in this case now, it's forming equal lows. So if I zoom out here, you can already see that the market is getting exhausted and being unable to form higher highs. basically forms a potential pattern where we see some form of reversal. So despite this area acting as consistent support, you can already see that a trend line has already been broken and there's more room for downside momentum. So in this case, potential drop towards the previous high means that we could be seeing prices dropping to 4,494 price level. So for the UK 100 index, there seems to be some big sell-off that happened last week. So after the big sell-off, the market managed to break the trend line, and now you can see that we are having a couple of retests. The market already retested the trend line early in the morning, and now we are retesting again. But nevertheless, it basically shows that the trend line was broken, and we could be seeing the market bouncing from there. So also notice that this was a previous high acting as resistance, and now it's acting as support. So if we continue seeing a strong bullish momentum in this pair, then we could be headed for Friday's high. So in this case, market bouncing strongly from this level would rally back into the pattern and get back to 76, 72. So from the Bitcoin price action, it shows some pullback happened the last 2 weeks. And after the pullback, the market has remained quite persistent on holding this support. And now we could be seeing some further upside momentum. And of course, from the last couple of days, the potential momentum might lead us back to this trend line here. So that's it for the day. I'll be checking to see if you guys had any questions. So Hyrax, JS code. Explain the Friday close and Sunday opening of markets and its importance. Friday closing prices are very important. Remember how the prices are formed. Every time you're looking at an asset and you look at the bid and asking price, that's the highest bidder and the lowest seller in the market. The highest bidder and the lowest seller in the market at close might be different from the guys you find on Monday. And this would be as a result of the anticipations that you're expecting for the weekend. So given the volatile nature of the world right now, especially counting on geopolitics, what's happening on the Red Sea, investors will seek to take some flight to safety during weekends. And sometimes you might see the market being volatile towards market close on Friday. So it's very important that you check on the market as it opens on Monday to see who are the new highest bidders and lowest sellers in the market. And that might be reflective of the events that transpired over the weekend. So luckily, over the weekend, we didn't have any news, but perhaps we'll be having more news happening over the next weekend. And that might result in some good gaps, which you can always capitalize on. So everyone has a number. Some numbers can be emotional and make you move on your position. In regards to this, do you pick the money or do you play as you had planned the take profits or stop loss? So I think planning a trade is one thing, and then trading what you see is an entirely different thing. So you might find a new setup in a market, execute your trade, but then based on what happens after you have entered, then you might react to that. So if a trade is going your way and then at some point it stops going your way and you still have money in your running trade, you can just decide to take profits. So it's always good to focus on trading what you see rather than what you think. So no matter where you have set your stop loss, you have to observe the market and react to what the market is doing. The last time I was doing a background research on you, I never found any lows. Canon like posting of high-end lifestyle. However, if I may guess, you ranking in more than these forex influencers. How? I think you're wasting time. I think a better use of your time would be to research the markets rather than me. How do you maintain a low profile? Just being me. nothing different. Hello, Victor. Hi, Francis. What are funded accounts, and maybe an example of such? Funded accounts not a topic for discussion today, but significantly covered that on the Bullish Banter podcast. So feel free to check out the Bullish Banter podcast on all platforms. You can check on YouTube, FX Pesa YouTube. You'll find a couple of topics where we have taken some deep dive into prop firms. How can I shift from executive account to premium account? Just log in to FX Pesa website, open a premium account, then withdraw money from your executive account and deposit that money to your premium account. Explain momentum for Euro USD, please. Euro USD, I think we have covered that already. So this is markets that are ranging, but for Euro USD, it seems clearly unidirectional. So if you count the number of candlesticks here, we have had, I would say 1, 2, 3, 4, 5, 6, 7, 8, 9. And this being the 10th candlestick, I think the overall picture is bullish. So I'm seeing a very strong bullish momentum. And from the 4-hour chart, this pattern here is called a morning star, indicating a very strong reversal to the upside. In this case, indicating that the euro might continue being strong against the dollar for the rest of the day. And this comes amid sentiments that the ECB last week decided that they are not done with rate hikes. They are very committed to getting inflation back to 2%. And if the ECB continues hiking rates while the Fed is considering cutting, that creates a policy divergence that strengthens the euro against the dollar. So this may explain the strong rally that we experienced last week. So despite the pullback that we saw towards the end of the week, the overall assumption is that the euro continues being strong for the rest of the week. So from previous, this week has been billed to have the lowest volatility volumes arising from banks taking holidays. Is this true? When do volatility resume? I would say liquidity doesn't imply volatility. Liquid markets can be volatile and they can be less volatile. So when the markets have lower liquidity, it's the spreads that tend to get wider. But at the same time, markets can be very volatile in periods of low liquidity. For instance, whenever you see a big spike happening in the news, sometimes it's due to low liquidity. Investors who have withdrawn orders to avoid the volatility that comes in from news. And as a result of that low liquidity, we have high volatility. So volatility and liquidity are not the same thing. In this case, when there's a low liquidity, prices can still be volatile. So as we approach Christmas, it's quite normal. We normally see volatility in the markets dying out. But then this year, there seems to be a very strong volatility happening in the markets, even in the week before Christmas. So last question here. What are synthetic indices and does FX Pesa offer them? So one, FX Pesa doesn't offer any synthetic indices. So the index that we have in terms of volatility index, assuming you're asking about volatility indices, we have the VIX volatility index, which basically tries to estimate the volatility of the S&P 500 over the next 30 days. So in this case, this is a regulated index or volatility index, meaning that it is listed on the CBOE, which basically means that it's regulated, cannot be manipulated, and it basically can be compared across different platforms. However, if you decide to trade any synthetic index out there, you should be aware that synthetic indices are not regulated. So in this case, they are prone to manipulation. So take care of yourselves out there if you decide to trade volatility indices. But then if you are very serious about your trading, then you should probably consider trading assets that are regulated on an and traded on an exchange. So that's it for the day. Thank you very much, guys. Thank you for your time. And I hope to see you on the next session, which will be happening tomorrow at the same exact time. So, summary for the day, it seems like the markets are just moving sideways, and we just have to be patient and wait for the appropriate breakouts. For instance, you could be seeing a breakout in USDN. If you decide to trade within these patterns, good for you. Personally, I think I would stay out until there's volatility. Pound USD seems to be on the verge of potentially breaking this consolidation. Euro USD quite bullish, USD CAD still in a consolidation, gold in this consolidation, and I think it's the same story across board. A range in AUD USD. We are seeing the Nasdaq also trading within this. The US 30, the US 500. I think a lot of these markets are just consolidating, so we might as well be patient and wait for the potential breakout. So for the French 40 stock market index, we are seeing a sharp drop. So perhaps we'll be completing the pattern and getting to this our trend line. So if you are hunting for a couple of pips, you might find one in these consolidations. But then if you're looking for a good risk reward position, then it makes sense to be patient. When did you start trading, and how many years have you logged generally? After how long can you say you're profitable? I don't think it's more about time. It's about the time in the markets. So being profitable, you don't have to take 5, 10 years to be in the markets to be profitable. All you need is to push in the time, studying the markets, practicing. And in that case, your timeline will be different from other people. So you can't simply compare a person who trades, let's say, a couple of times a week versus a person who trades full time a week. So in this case, different people have different journeys. So you might have to lay your own path. So personally, I've been in the market for what? Since the same date, around this area 10 years ago. So what do we expect this week? Volatility or liquidity? So this week, we're expecting the markets to be trading on low liquidity because a majority of the players are going on holidays. But then the volatility is expected to be significantly higher, especially with bargain hunting from US equity indices. So there's been a very strong rally that we experienced last week. So we should be seeing some volatility accompanied with the Nasdaq, the Dow Jones, and the S&P 500. So that's it. Enjoy the rest of your day. See you then. Volume is basically a historical record of liquidity. So the only way you know the liquidity in the market is by tracking the volumes. So when you're looking at a stock market and they are saying this number or this volume of shares was traded on Monday, then it's a historical record of the liquidity that was in the market.